understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. We're bringing you another episode of the Tech Behind FinTech. I have a special guest that I'm excited for today and a special topic that we will be talking about. Just so before we go on, my name is Nnamdi Osuagwu, host of the Tech Behind FinTech. Joining me today is Caroline Michel, co-founder of Deontea. When we'll be, I'm going to go over a bio and company background. But before I do that, how are you doing today, Caroline?
Good, thank you for having me today.
Oh, excellent. Let me read a quick bio. By the way, today's show is on the future of blockchain regulation, prediction, and possibilities. So let me just go over Caroline's bio. Caroline Michel holds a master's degree in economics and a postgraduate diploma in compliance management. After leaving the financial market, she held various positions as a senior compliance executive. Before joining the Financial Conduct Authority, she was instrumental, among others, in the drafting of numerous sections of the Commission Delegated Regulations supplemented MiFID II and various L3 provisions such as ESMA and Q&A on investor protections. Caroline is joining us from Paris right now. Once again, she's a co-founder of Deontea. So before I begin, let me just do some housekeeping things. Number one housekeeping thing is to get our show, just have the signature scrolling in the bottom. Boom, we're there. Number two housekeeping is talking about what streaming platforms we're coming live from. We're coming live from Facebook, LinkedIn, YouTube, and Twitch. Those on those platforms, please ask a question and then you'll be posted as part of the video. On a separate stream, we have Instagram going from a separate stream. We're pinned Tech Behind FinTech if you want to go there to be part of the show. We have our first comment from the audience. Machine, look what happened to Silvergate and Signature Bank last week. For sure, we'll talk briefly about that, but today's show is on the future of blockchain regulation and predictions of possibilities. We'll be doing a separate in-depth show regarding that topic. But definitely thank you for the comments. Before we jump into the blockchain, I think more so around Silicon Valley Bank. Since we're talking about regulation, I want to get your thoughts on that, Caroline.
Unfortunately, this is something I've seen in a different way, but the principle behind it are systematically the same. We believe at Deontea that technology is a tool, it's great, and it's supposed to effectively enhance what we're doing, make it more easy to do, more accessible. However, the risk faced by any institution active in the financial market are the same. And when they are not managed as properly, you face the same risk. And when something goes on, like today, we have inflation coming back. So it means rates going up. Rates going up means liquidity is more scarce, money is more expensive, and effectively it enhances vulnerabilities that do not appear when you are in a growing market. And basically my thought about it is that if I understand well what happened in the US, certain banks of smaller sizes were just below the threshold where they had to comply with certain prudential rules. And it happened that this was the case of that bank. And when things go sour because market circumstances change, no market goes up to the sky. So they goes up, they goes down, they go sidelines, but nothing goes up to the sky. Basically, the market circumstance changes and the prudential position of the bank got deteriorated. And effectively, we got what we have, given that, again, I'm not a specialist of the US market, but what we got as news on the subject is effectively the lack of diversity, the fact that the bank didn't mark to market their reserves. And in that circumstances, when you have a difficult market, you are more vulnerable up to going to resolution. And one example, which is quite interesting, is the opposite situation with Silvergate. Silvergate went in trouble, but they're going into resolution nicely without actually putting the entire system at risk.
Mashik has other comments. Yeah, so Mashik said I worked in Signature. It's not exactly what. Yeah, so we were talking more about Silicon Valley Bank, not Signature, but definitely Mashik. This is probably going to be a show dedicated to itself. But today's topic is more so on the regulation and future predictions around the blockchain space. So, in talking about regulations and switching up some of the recent blockchain debacles, right? What comes to mind? That comes to mind, Terra Network. So the question I have is, a lot of people, and it's interesting that things are happening in the banking side also. And the question is, looking at FTX, looking at Terra Network, could regulation have prevented the issue? And if so, how?
Okay, that's a very political question, so I will try to not answer that because I do not want to kind of make people angry. However, taking something slightly different, but exactly in the same subject. If we're looking at what happened, we're looking at issues around governance. We're looking at issues around, again, prudential positions, diversification of assets, transparency, customer protection. We can as well talk about segregation of client assets. All those subject matters are addressed by traditional finance. I'm not saying that the rules in place in traditional finance are perfect. They are perfectible. Obviously, those who lived through 2008 will say, okay, traditional finance doesn't do it. Okay, yes, it does not do it maybe all the time, but each time it learns and each time it tries to address those issues, the things that went wrong, to try to find solution for it not to repeat itself. So regulation, in my point of view, may have addressed those issues in the sense that if certain of those very standard principles of good governance, I would say not even in the financial world, but just good governance globally, would have been followed, maybe the situation would not have been so dire and led to the collapse of those two, one protocol and the other, the company itself.
It's interesting when you said that because, my background is really specialized in cybersecurity, and that's what I do. And that's something that I, similar to what you said, right? When you look at breaches, it's always the low-hanging fruit. And a lot of companies that get breached, they don't have basic governance in place, basic cybersecurity protocols in place. So it sounds similar to what you said in terms of regulation and looking at these types of things like FTX and reading about it, talking about the story. Certain just basic checks and balances were not in place. Certain transparency not in place. So it's interesting that you said that because I immediately thought about things that I talk about in the cybersecurity space.
Yeah, I think it's always the same story. Unfortunately, as some people always say that there is nothing new under the sun, but there is always something new under the sun. The thing is for us to learn from what went wrong to try to improve the situation. One has to remember that the roles of regulators is not to sanction companies, it's not to stop the business, it's to ensure two main things. The first one is the protection of investors, consumer, people using the systems or the services, to ensure that there is a fair, that the communication they receive is fair, clear, and not misleading, that enough transparency for them to be able to take informed decision. And on the other side is to ensure the stability and operation, the stability of financial markets. Why? It's not, again, because they just want to do it, like it's their life ID. It's just that financial markets, they finance economy. This is what they do. They ensure that flows of capital is there, and that firms that need that capital can access that capital. So it's terrible when you are in the situation where basically what happened in 2008, because it's a trust issue, and as well as specific technical issues, but when it stops, because when it stops, not only effectively those financial companies goes under, but the entire economy around you goes under, because firms, normal firms, they cannot go to their bank to actually get a credit to, I don't know, invest, to do new products. They cannot, the trust is lost. People lose their jobs. Because they lose their jobs, they basically don't have income, so they can't buy products, and it's a vicious circle. So the idea of the stability of financial market is not to, as I said, to police or to sanction. It's just to ensure that it works. That's it. So now, I think that the blockchain technology is great because it might enhance that, it might secure it. Hence, there are specific risks that will have to be addressed. And also, the industry must think about the old risk, because they are still there. Governance, maybe not the same way, but the principles are still valid.
No, I mean, that's a great point. And and there's been a lot of talk, obviously, in the US about putting certain regulatory actions. So UK, they have something called Markets in Crypto, MICA. I think I'm pronouncing it correctly, a regulation that will go into effect. I think it came out in the fall, but it's due, from my understanding, in 2024. Can you describe that for us?
So MiCA, basically, this is the Market in Crypto Assets regulation. It's a regulation. It's a European regulation. UK has a different set of rules right now. Basically, all around the globe, most countries have implemented some kind of oversight for crypto or digital assets players, which are not coming straight from regulators, but are coming from FATF, Financial Action Task Force, that in 2019 included VASP, means Virtual Asset Service Providers, in the framework of money laundering and terrorist financing. So right now, most of the countries have implemented some kind of oversight to ensure that those firms active in this digital space will implement arrangements to ensure that they monitor flows, to identify suspicious activity, and to report them to the relevant authorities. That's aside. Now, the question is, what's next? Means regulating the activity of the service itself. Here, there are different approaches. In the US, I think you are still thinking about it. Some of it goes as, it's a security, so you have the laws. The others say, it's not a security. Anyway, it is still in discussion. Then in Europe, we have effectively what is called marketing crypto assets regulations that was adopted last year and comes into effect early 2024. What it is, it's basically the regulation that will govern the activities in the crypto space. And contrary to what we have in traditional finance, it's covering everything. So it covers ICOs, primary markets, generally speaking, stable coins. It covers as well, basically digital money, and all the providers. It's backed. It's not new. Means the principle announced in this text are not new. They are something that we learn from traditional finance. You see, I made the comparison. primary market ICOs. You have a lot of legislations around IPOs or new issues about transparency, about the fact that you cannot trade during certain periods, about the type of information you need to provide clients, and so on and so on. Same thing for ICO. It's nothing different. It's just okay, I will not say a financial instrument because I don't want, but it's an asset. And in that sense, you put that on the market. It's a new one. You will have to follow certain rules. And it's a white paper explaining all the risk and the features of the instrument. Now we're talking about stable coins. Obviously, again, you have different types. How they will be regulated. Terra Luna, I think, is the example. You have those that have 100% peg. The other one are, I think, they have some kind of algorithm behind it. Obviously, it's not the same risk. If you think about it, you can look at money market funds. Money market funds, you have different types. Again, certain rules apply, certain information, certain way of actually managing those. Then I told you have all the service providers. You are what? You are a broker in those instruments. You're providing investment advice. You are a platform. All these standard activities. There are rules, and you will have to comply with them. What can you do in advance? Because it takes time to prepare to that. The text is out. Level 2 is not yet out. However, the big principles. Okay, go to what exists already. If you want to know how a service provider needs to act, investment advice, platforms, and everything, you can look at MiFID. You have all the information in the world you need. Custodians, you can look at CSDR. All the information in the world, it's already there. Obviously, adjust because crypto technology blockchain provides certain facilities, and in the same side, on the opposite side, you will have issues with certain other risks, but you can already work. You can already prepare yourself to what it will look like. So basically, MiCA is a full comprehensive network that will govern the activity in the digital space. I prefer to call it digital space because when we're talking about crypto assets, they are not only crypto assets. You have, obviously, some of them will be securities that will fall tokenized securities, that securities. So you have a lot of different assets there. So assets, it's nicer, but that will govern the different players and try to achieve what was kind of achieved to a certain extent, but achieved in traditional finance to ensure a certain level playing field between players, the appropriate transparency, consumer protection, and so on and so on.
Look, let's dissect that just for the audience. We can just break some things down. So you mentioned ICO. So for the audience, initial coin offering, right? And we've seen scenarios, right? So let's look at why something like that is important and how it potentially could in the past, how things like that have hurt consumers. So we had situations where someone comes out with this new token, right? They're going to do an initial coin offering. All of a sudden, they get some celebrity to endorse them. The price gets raised astronomically. People buy. The owners cash out and disappear. Called a rug pull. So just let's go through that scenario and how you describe MiCA. How would that prevent a rug pull?
The first is that financial promotion is highly regulated in the UK and in EU. You cannot have anyone talking about anything, about everything they want. If you want to talk and promote a financial instrument, in that case it will be a digital asset, so an ICO, a token, you have rules. And the rules is that the information has to be fair, clear, and not misleading. Actually, it's quite interesting because Belgium just adopted a specific framework for influencers, and France is talking about that. So basically, it's a criminal offense to promote financial instruments without having the right authorization, because this is considered already as a basically providing a financial service. So the promotion and marketing of financial services, in that case, we say crypto services, is part of the service. And when you are supposed to be a firm which is authorized or have a license, you not having it is a criminal offense in the US, in the UK, in Europe, everywhere. So financial promotion is extremely strict on what you can say, how you can say it, by whom it is actually said, and the type of information you are supposed to provide to your customers. So the one about the celebrity coming in, we had that example because I think it was Nabila who actually promoted, I don't remember exactly what, and she got a fine of 200,000 or 2 million euros for promoting, promoting certain financial instruments without the right of doing it. So you already have a framework on that side. Regulation cannot and will, stop everything bad happening. That's not the way it works. It's like if you say to me that police will stop all the crime happening. No, it doesn't happen. You still have crime, but you have less or less serious because and the second is about the information that clients receive. Because if you do an ICO, you need to put a lot of information about the firm itself. So the client can actually look into it. So it's not like, okay, I will just, it's a great ICO, buy it, it will go up. No, it's who is issuing it, what is the firm, what is the background, where that token will be listed, will it be listed, and so on and so on. So a lot of information. I'm not saying that it's enough, maybe it isn't, but at least it's much more than what you have right now.
Question on that, right? Maybe it's a multi-part question. Number one, who's inspecting that? So I put out an ICO.
You are supposed to
have the white paper is not exhaustive, right? And I'm going against the MiCA regulation.
No, it is. When you issue an ICO under MiCA, when you will issue an ICO, it depends the size because there are thresholds. You have to file that with the regulator.
Yeah, that's what I'm saying. I just want to understand.
And the regulator is actually checking it. So if it's not adequate, you have to actually amend it.
Oh, okay. And I would assume repercussions of just putting it out without it being amended will result in some sort of fine. Correct?
Definitely.
Okay. Now you touched.
Now for those who listen, MiCA is not finalized at level 2 and level 3. Okay, so this is the text at level 1 in the sense of the big principles. In details, how it will happen today, I'm not in position, or no one is yet in position to say. But usually, this is what is expected when you have an IPO, when you have a new bond issuance, when you have a new fund. You have a validation from the regulator, and if it's not as required, you have to redo the job until it's as expected. And then you can actually issue or start marketing.
So you also now mentioned in the description of MiCA and certain things that are monitoring stable coins. And for those who don't know, stable coins mirror some sort of dollar value. So hence the term stable. It should not be fluctuating. That's the idea. So if we look at something like the Terra network and what happened to their stable coin in the past, it went from, it got depegged. So it was no longer worth the dollar valuation. A lot of people lost money and it impacted, various firms and their other coin, Luna, just dropped like 99% or some ridiculous number like that. What ways are MiCA addressing the stable coin so we can understand that?
First, it makes a difference between the different types of stable coins. If I understand well, you have two main categories. You have algorithmic stable coins. So it's a kind of like you have some kind of algorithm who calculates the peg. I would say if you want to make it more easy to understand, it's a structured product. So you basically don't own the assets, you own a peg or a representation of that asset. That's one type, which would be categorized as extremely risky, more risky than the other ones, which are supposed to have actually, if it's $1, it's $1. So they have to have the reserves. So the question here, if you're looking at it, what are the risks? That's the question you need to ask yourself. What are the risks? Okay, someone issues, let's say, normal one-to-one stable coins. How do you approach that issue? What's the risk? Is that basically, effectively, the company behind that, the one that manage or issue that stable coins, doesn't have the reserves. Means you don't have one-to-one. You just have something, and then the rest you don't. So that's one point to address. The second is how those reserves are invested. Are they invested in other cryptos? Are they invested in dollars? Are they invested in stable instruments? Is there a market to market? So if you're looking at this, all those things are not very different from, the prudential issues that banks have to address every day. Is how you put together, how you ensure that the value of something you're selling, you actually have the counterparty to it. All this has been already addressed one way or the other through traditional finance regulations. And for algorithmic, that's something different. But again, the big principles have been already as well addressed through various regulations. And what's important? On the client side, it's important that they know the difference. What is what? Means that you have to disclose what type of stable coins we're talking about. Then, on the firm side, what you need to address is your algorithm working? What are the stress tests? Did you actually crash test it or not? Look at MiFID II. Since 2018, algorithmic trading and high-frequency trading is regulated, and there are certain obligations that firms using this type of trading have to follow. That might be a good example of a starting point to look at how you manage this peg or the fluctuation or this type of things.
Really love how you bring it back to the current regulatory statutes that currently exist to give people a framework, to companies a framework of what to follow before the official one is put in place with MiCA. Hey, I really like how you do that, because in drawing these analogies, it brings clarity. Like, oh, hey, these exist. This is how we're doing it. Let's look at the comparisons.
Let's look at the comparisons. Let's look at what works, what doesn't work, how we actually, amend it, maybe change it to fit better, obviously, crypto works and blockchain, because it's not one for one. We agree, there are differences. But the principle, the way we go forward, there is a lot of literature, a lot of materials who have written on it. The entire preparation for MiFID II, for instance, is an extremely interesting material, because the regulators and ESAs and many stakeholders are asking questions. The discussion papers, the consultation papers, they're raising questions, they're raising issues. And all this, Bank of International Settlement already wrote on this as well. So there is a lot of very common, let's say, things that are in common. And instead of trying to reinvent the wheel, let's use what we already have to move forward and, have something better. Definitely, that's the idea. Hence, use what we have and build on it. Try to change what didn't work, but don't throw everything away and try to invent, because it's it saves time.
Is it a correct statement? Help me out here, because if it is, and some follow-up questions, to say that the MiCA regulatory standard in the EU is basically leading the effort in terms of regulation around digital assets?
I would say that, if my understanding is correct, but I'm not an expert in what's going on in Asia or maybe other places, but I think it's the most comprehensive regulatory framework for digital assets today. Don't forget that the UK has already put out a consultation on this as well, which is kind of very similar, but there are differences, because since the UK has left the EU, it came back a bit to certain standards that were put aside for a few years. So there are interesting things there. And this consultation, I think, closes in April, if I'm not mistaken. And again, here, please, as an ex-regulator, when a regulator puts out a consultation paper, basically his mind is kind of 90% set. So you can expect that those type of rules will be there. There will be changes on the margin. There will be certain amendments, certain things. But basically the subject matters that were covered will be covered in the new regulation to come. So it's not like, oh, I don't know what will happen. It's a totally new area. No, you already have a lot of information that is published. So once again, a regulation or a regulatory framework is not something that when it enters into force, okay, oh, I am discovering the word. No, you have plenty of time in advance using what exists, what was discussed, all the material that is published by the different regulators and agencies to prepare yourself to the things you will have to comply with. And I believe it's even more important for stakeholders in this industry, in the sense that the culture of compliance or the culture of regulations, which is something that we have in traditional finance for a very, very long time, is not very common. So there are a lot of new principles and new things that will be new for this industry. And in that sense, it may take even longer to really understand how you actually can put that and integrate that in your current processes. Because one thing is important as well is that regulation is not to, it might amend or change or modify certain of your processes, but the idea is not that. It's just to make sure that each time at each level of the company, of the firm, the things that are done, if they potentially may impact, once again, investor protections or the stability of the financial market, they are addressed with the regulatory points. So regulation is something that will enter in every part of the company. So sometimes it might be a bit difficult, but at the same time, I think it's great because for a lot of firms that are in this industry, talking blockchain, they are startups, they are new companies. Regulation can help them scale up because it sets out governance. How do you actually manage a firm? How do you ensure the continuity and of the services? It's written there. You have the tools. Use them. Again, from a reputational point of view, you have two stakeholders you interact every day with. Your investors, the one that fund you, and on the other side, your clients, the one that will be using your services. Don't you think that given all the industrial incidents we had in the past months, let's say, this is something that you can leverage? Saying to your investors, means the one that actually fund you, okay, I'm doing the right things. Your money is safe with me. I will not go under the next day. Or your investors, your money is safe with me because I put in place all those governance, all those principles that actually were tested in the past. So I cannot guarantee that everything will go well. That doesn't exist, even if in the normal life, some companies goes under. But at least it will not go under because of this mismanagement or that we had seen in all the cases that happened in the past months.
Based on that, I mean, definitely increases trust in terms of that. I mean, like I said, I draw similar comparisons to the cybersecurity side. Like when we talk about fintechs, a big thing that for fintechs that deal with vendors is SOC 2. So, you know, that's something that you know, getting that SOC 2, especially the highest one, type 2, it makes the due diligence process when dealing with vendors a whole lot easier than not having it. So that's something that we specialize in. So question, based on that, and just to put a audiences in the US, do you see a MiCA similar coming to fruition in the US anytime soon?
I don't know. Honestly, I don't know at what stage you are because the thing is that I think that with time, we will have similar frameworks with time. We are not doing the things always the same way. The direction of travel is the same, but the way the US, as we see it from Europe, obviously, are tackling the issue are slightly different. The EU and UK authorities, basically, they didn't go after firms to say that they were carrying out illegal activities, they didn't have a license or something. They actually put in place frameworks, small, tentative, at least IML and some others. And then they build on this to really bring in tailored framework, regulatory framework for digital assets. In the US, for the time being, what we're seeing, okay, so you can, as I said, I'm not an expert of US regulations, but what we're seeing from outside is that the Fed position was first to go after all those firms saying, by the way, guys, what you're trading, those are securities, so you have to comply with existing regulations. And now they're going at the second step, which is money laundering. But I haven't heard or seen, except that there is a lot of requests from the industry, any documents or work being done on putting in place a specific or a tailored regulation for the blockchain industry yet. Maybe it will happen. Or maybe I'm mistaken and I haven't read enough of what is published, but it seems that the Fed is using what they already have instead of trying to not only use what they have, but build on it to have something which is tailored for the specific industry.
Oh, and another question, right? So for US companies that do business in the EU that are like blockchain related businesses, would they have to conform to the MiCA standard?
Yeah. Basically, the rule is exactly the same the other way around. If you want to provide financial or blockchain services, I know, because you don't like, a lot of people, a lot of stakeholders don't like to call it financial services, but let's say those type of services, in the US, you have to have a license. Yes, the same way, if you want to provide financial services within the EU or the UK, you have to have the appropriate license. There are third country accesses, because I know that the US has entered into some agreement with the EU on this, but that will be for professional clients, and I'm not sure that is yet available for digital assets. It is definitely for MiFID, but it's not for standard financial instrument, but it's definitely not the case for digital assets, knowing that on the top of it, in the digital or blockchain industry, there is no really a difference between what would be a professional or informed client and a retail client. It's a slightly different, so you have differences here. So yes, they would. Currently, what exists is that they will have to be registered in every single country, because that's the point. That's what MiCA wants to change. It's to have a global framework instead, and that allows for passporting through the European Union. For the time, it's not the case. In France, there is what is called the DASP regime, or the PSAN in French regime, which allows for the registration. Starting July, it will be a reinforced registration, another layer that might be something that you want to explore, because there will be requirements around cybersecurity, ICT, data security, and so on. And then you will have MiCA. And knowing that, so it's a choice. We know that the biggest platforms already have registration in several European member states. They are already present as well in the UK. But effectively, when you provide type of financial services, you have to have a license or be registered, depending on the type of activity or services you provide.
So coming towards the end, there's a couple of questions that I would like to ask to make sure that we get covered. So one of the questions that we received when we put this topic out, someone said, what lessons can be learned from past attempts at regulating disruptive technologies?
It's a tricky question. It's a tricky question because the the issue regulators face when they enter into new technologies is their own knowledge. That's the first really issue that have to be overcome, is the regulators understanding the new technologies. Not understanding in the sense of, okay, fine, I need to understand how it works, how TikTok works, how WhatsApp works, how, just for the sake of understanding it. No, it's to be able to understand what risks those technology may bring in the market. So, and some of the risks will be the same. Actually, the say is same activity, same risk, same rules. Varies. But this is about that. You need to understand the technology to understand the risk. A regulator's work is a risk-based work. It's not like I will go after every single person. No, they will look at what systematic risk it may bring, or at what level, where. And for that, you need to really understand it. So the first one hurdle is to increase the inside knowledge. Lessons learned, I would say that one of the latest example would be the Payment Services Directive or regulations, because that was the first, let's say, the last one of the noticeable changes that were brought in the market, is the instant payments, and the fact that today when you bank on your mobile phone. All right. Before, you had to go to the bank and do. The most known in Europe are guys that are called Revolut. I guess you heard of them, even in the US. That's really the most disruptive one that we've seen, like systemic. Okay, it's not the small things. What we learn is that most of those players, they lack, as I said at the beginning, the culture, the compliance or the regulatory culture. So very often, and I will not talk about the ones that know that they have to do something, but they on purpose don't do it. That's another layer, that's called fraud. Here we're talking about the one that genuinely just have no idea. They think that it's outside the scope. They think that there is nothing to do. They just do the app, they just do the thing and say, okay, great, let's try it. Without understanding that behind that, their activities may bring disruption, but not in the positive way this time, but disruption in the sense that it puts them and the clients at risk. So what happened, effectively, this technology has evolved, and basically the regulator stepped in and put together this framework that was quite a while ago, and now we are on the PSD number 2, and we are actually I think it is being recast, and because in the European directive and regulations, you always have review clauses every 3 years, 5 years, whatever. They have to analyze whether it worked as expected or something needs to change. Actually, MiFIR this year will change, because what was implemented in 2018 for the stability of financial markets, venues, commodities regime, and everything didn't work as intended, so it's being recast. And so what we learned is to put sandbox, that all the regulators have that now. UK was the first, but now you have that in France. You have that in with many regulators. So for those firms that want to disrupt, that want to propose a new way of doing things, the regulator's door is open. They're happy to learn. They are actually looking for people to come to them and discuss those issues. Okay, this is what we want to do. This is our project. Do you see some issues? How do you think we can discuss this? Most of the time, this is not at a regulated stage yet anyway. Okay, so what is the cost? What would be the negative part of, okay, I have a new idea, I have something very new. Let's call the technological or sandbox unit. Let's see how we can actually work together, because this is what we want to bring. And it's a cooperative work. And really, my experience as an ex-regulator, and I'm still seeing that every day, and I've seen that when we put together MiFID, which seems to be ancient now and so traditional that people didn't come out, didn't come forward. And then when we put the documents out, everybody complained. I can accept that you complain if nobody heard you and you didn't have the opportunity to discuss, but not when effectively this opportunity was given and you didn't take it.
Yeah, I mean, it's interesting, when you look at certain companies that are in stealth mode, it could be situations where worried about intellectual property getting out. It could be various reasons and just frankly time, right? So not worrying about it until you have to. But I definitely, I know we talked about this in certain episodes a while ago, and I think in certain Caribbean islands, if I'm not mistaken, like Barbados, they did implement the sandbox concept in which companies came out and worked in that sandbox environment and they experimented. And for those that don't know, sandbox just basically means that it's just literally isolated environment where you can test things out and experiment. That's what we're referring to in sandbox. Last question. The title of the show. What do you see? Obviously, you don't have a crystal ball, but based on your experience, based on past things in the traditional financial markets, where do you see blockchain regulation going? Just to sum it all up.
In this exactly the same direction than traditional finance. Because at the end of the day, blockchain is a technology that is supposed to facilitate and provide additional tools. But at the end of the day, the rule, as I said at the beginning, is same activity, same risk, same rules. So the rules will be different, certainly to a certain, not materially on the margin, but as soon as you actually go and solicit client money, means everyone's money, the regulators has to step in. There is no way out. That's because this is their role. This is what they were tasked with. This is, you will not ask the police to know that there's something going on that may go wrong and actually look the other way. So regulation is there for stay. It's not something that is disappearing. I believe that one of the things that the blockchain industry may do is to reach out to regulators and try to work with them to put something that will be manageable, proportionate, and will really basically help everyone to be comfortable with what's going on. And for me, the real mistake is to try to, okay, I'm hiding, I don't want, and I'm just disagreeing. Disagreement, like say no, doesn't actually make things progress. What you need to say is, okay, you want to do this because we understand client that blah, blah, blah. Okay, let's propose something because we believe, as from a practitioner from the industry, that it may actually answer your question or your worries or the outcome you are seeking. And this is really what should be the play, and regulators will be happy to actually hear you out. Actually, okay, I don't know in the US, all right? We're talking about EU here because and UK because this is my expertise.
But I think what I love that you said, and I think this is a huge jewel that could be applied to just business in general when dealing with regulatory standards and you want to be proactive, right? I'm going to forgive me if I butcher it, correct me, right? Same activity, same risk, same rules. Is that accurate?
That's right.
I absolutely love that. This is my first time hearing that, and I'm going to take that. I really like that because I think it could apply to financial markets. It could apply to cyber. It could just apply across the board, and it kind of gives you some overall insight on potential regulatory issues that you may run into.
Exactly. And there is one thing I would like to add, because we talked about really MiCA and the specific blockchain regulations even to come or already there. Don't forget that in EU, you have a lot of peripheral issues that you will have to address, which are more into your field, actually. You have DORA, Digital Operational Resilience Act. You have the Digital Act that went out. You have GDPR. All these things are actually tackling issues around cybersecurity, data privacy, data protection, everything that goes around this, and the rights of customers to their data and so on. So that's as well something that you need to take into account when you are putting together a company or looking into it, because it's not only about the market side of the activity, but you have all these cybersecurity data issues that are heavily, not heavily, but that they are governed by stricter rules. And there's a lot, the last one is the Digital Act. I think it's a very controversial one, because it, especially around smart contracts, in the sense that it will force the smart contract issuers to, my understanding, to actually add layers to ensure that smart contracts, okay, they are smart contracts, they do whatever they do, but once they enter into the consumer space, then the consumer rules that apply in everyday life will apply. So some of the example use case would be when you, for instance, go to subscribe for a credit, borrow money, mortgage and everything. In the traditional finance, you have 7 days or 15 days to actually retract. And the proposition that was put on by the bank is cancelled. You see where I'm going? So, and you have a lot of things like that, because you have rules around as well, goods that are sold through internet, means not physically. You have as well certain rights to cancel the contract. So that will bring some complexity that I believe is something that maybe is worth looking at again in advance. I'm not saying that you have to comply with everything, but think about it. Will it apply to me potentially or not? Is my type of product as a principle falling in the categories where my consumers have additional rights, like in the normal life? So it's there is a lot of things that are going on. It's really the beginning. I think it's extremely exciting, but it might be complicated, and we at Deontea are here to effectively try to help firms to navigate that maze, because it's definitely not an easy one.
You know what? I absolutely love this conversation. You're a wealth of information around the regulatory space, especially in the EU and UK. And I'm just gonna put this out there. And what I do is I call them friends of the show, right? So anytime something goes on news related in a certain region, especially there, and it's around this space, you are someone that I would like to call upon just to help the audience out, so you can break it down and help us understand what's going on. So I really thank you for your time today. Before we leave, can you describe, tell people what Deontea, what you do, the services you offer, and also how to find you?
You can find us on our website. By the way, good news, it's being recast. It's being redone to look a bit more modern, because it's now 5 years old since the company was founded. So it's www.deontea.com. It's in English, so no worries. By the way, for the US audience, even if you come to Europe and require and want to get licensed in France or in any other European country, you can do that in English. You don't need to speak the local language. Regulators are multilingual. But European legislations are written in English, negotiated in English. And second, what we do, we are your support, your resource in regulatory space. So everything from strategic thinking, how you want to do things, to basically helping you, shaping your arrangements, auditing those arrangements, looking at what you already have or what you want to put in place in any part of the regulatory space except credentials. We are not an audit company. We don't have accountants. So we know that you have to follow specific rules, but we will not be able to help you there. But there is so many things to talk about in the consumer space, in the pragmatic, in the activities, in everything. So visit our site. You see what we did, what type of services we can provide. And again, in English, on cross-border basis, on both sides of the channel.
Also, I put the website in the comments and I posted it here, so it'll be part of this video. And you can go to learn more about Deontea. Carolyn, thank you very much for your time today. I'm going to shoot you a follow-up email just behind the scenes. Once again, really appreciate it. To all the guests, if you have follow-up questions, as always, we would you can post them in the comments. We'll get them answered and bring it back to you on our next episode. Every Friday, 12 p.m. EST, we go live. So tune back next Friday, and we'll be back. Thank you very much for viewing. You guys have an awesome weekend. Make it spectacular. Cheers.
Thank you. Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.